about 17, 18 points. Joining us right now, Tom Lee, Fundstrat Global Advisors, Head of Research. Good morning to you. Want you to weigh in, if you could, on this debate we've been having, or I should say the debate maybe the White House is having over these jobs numbers and what it portends for the economy and therefore what it portends for the Fed.
We can see that Fed fund futures jumped from roughly 2.3 cuts by the end of this year to almost 3. So on the heels of that jobs report, the bond market essentially is saying that the labor market is now deviating further from the Fed's target than inflation, and therefore justifying actually one additional cut. So I think that makes sense to me, because we know inflation, and that August CPI gets reported this week, may be elevating, but that the markets are going to begin to view that as transitory. Whereas the weakness in the labor market, as you know, once it begins to weaken, it's very hard to reverse that momentum. So I think it's important for the Fed to intervene quickly.
And are you of the view 3 times this year, minimum?
Sense. To me, if I look at what the bond market's pricing, which is now essentially 3 cuts, and the Fed is talking about 2, the bond market is saying the Fed is behind in terms of how they're perceiving these changing conditions. And so I think on the 17th, when the FOMC makes its rate decision, I think there is a chance the Fed responds to that. And if it does, it's going to be good news, because the bond market is going to take comfort from the Fed recognizing the labor market's weakening.
Hey, Tom, even if the Fed cuts rates, it controls the short end, but not the long end. What do you anticipate happens on the longer end, and what do you think happens to the mortgage market, too, as a result?
The long end is something to wonder about, because we know globally, the 30-year especially has crept up. And we know that the Fed and other central banks have acknowledged that monetary policy has a lot of influence up until 5-year. You know, the correlation is 90%. But once you get into the 10-year, the bond market is making its own decisions about growth. That is something kind of troubling. But on the other hand, I think mortgage rates could come down sharply, because the spread between the 30-year mortgage and the 10-year is over 300 basis points. The 50-year average is around 160. So the Fed, if it begins to resume cutting and the bond market views that as essentially an easing trend, the 30-year mortgage could drop 150 basis points if the 10-year doesn't even move. That's a lot of easing for the housing market.
That is a big deal. And I know you're not an economist, but you have to have a view on where you think the economy is headed. If we get these Fed cuts and the economy, doesn't take a steep leg down, despite what we've seen with the jobs market, that's one thing. But if we get these cuts and you're also dealing with a slowing economy, potentially even a recession down the road, I mean, that's a completely different story. You looking at these Fed cuts as for good reasons, because we can do it and get away with it and it's going to improve the economy, or you looking at this and thinking, yeah, I worry about what comes on the other side?
I'm going to take the camp that I think that these cuts are actually going to be very constructive for the economy, because the 30-year mortgage is strangulating the economy. We know housing has slowed dramatically, but we also know that there's a lot of pent-up demand for housing. So it's a market that does need to be fixed in terms of easing sort of supply-demand conditions. And we also know that ISM, which is a measure of business confidence, has been below 50 for 31 months. It's the longest stretch since the ISM's ever been created. So I think business confidence recovers if the Fed starts to cut. And so the combination of easing mortgage rates, business confidence recovery, I think is kind of a broadening cycle. And actually, I think that's why small caps have been the second best performing group after Mag 7 over the last 8 weeks.
Tom, one of the things that Scott Bessent said was he thinks that the economy is actually in better shape than we think, and that the jobs numbers are going to get better. How does that factor into your thinking, or does it?
I think on the margin, I'd agree with Treasury Secretary Bessent's comments for 2 reasons. One, when we go through corporate earnings, we don't have any increase in comments from businesses saying business tapered off in July or August. So even though the labor market shows like it's deteriorated the last 2 months, business conditions haven't. In fact, even the Fed's beige book, most regions reported improving conditions. So that is one thing. And the second is we know the labor market undergoes a lot of revisions, and we get September's benchmark revisions. I think it may show that the job market's been weak all year. And in fact, maybe the last few months have actually been stable. So I think Treasury Secretary Bessent is sort of correct to an extent.
Tom, Bitcoin, before we let you go, tell us what you think. We're at about $111,000. The upside, the downside from here?
Bitcoin and cryptocurrencies like Ethereum are super sensitive to monetary policy. So I think that September 17th is an important catalyst. Crypto typically does really well in the fourth quarter. So I think Bitcoin can easily get to 200,000 before year end. I know it's a big move. It's almost a double. But that's also going to be a
double from
for...
here. Let's just, hold on. Let's just take a quick pause. A double from here. So everybody's listening to this. We're at $111,000, and you think we, by Christmas time, effectively, we could be at 200,000?
That's right. One of the reasons Bitcoin stalled this year is the Fed's been on pause for 9 months. That pause all year, if you look at an easing cycle, that's only happened 2 other times, in 1998 and 2024, where the Fed began to resume cuts in the fourth quarter in September. Equities do really well. As you know, crypto is beta to equity. So I think it's going to be a very strong fourth quarter. Small caps should also rally, like IWM, but that also is really bullish for Ethereum, which is highly linked to small caps.
So you are seriously bullish into the end of the year at this point, given these rate cuts. You don't look at it as bad news is good news, but therefore the good news can't be that good situation?
I would be more cautious, Andrew, if we didn't encounter so much skepticism about stocks. I think year to date, the S&P is up 10%. As you know, when you look at a pretty good measure like AAII, net bulls, less bears, it's been negative for 5 weeks. So at all-time highs, investors are bearish. And we find that skepticism among our institutional clients. So I think most are kind of bracing for a defensive view between September and year end. That's why I think that the stock market will surprise to the upside.
Tom Lee, from your lips, thanks so much. Appreciate it.
Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner, live today in Huntington Beach, California, at Future Proof, a gathering of around 5,000 financial advisors and investment professionals. Josh Brown's Ritholtz Wealth is the key driver of this event, which means he's with me here, along with Stephanie Link and Shannon Sakosha. BlackRock's Rick Reeder, he is the keynote this year. He'll be with me right here in just a little bit. Our Leslie Picker is going to speak with Jamie Dimon live shortly. There's a lot going on today. Dan Ives is going to be with us as well. We're going to kick things off with these record-setting markets and how best to play them. And Josh, I'll go to you first. And we'll talk about this event in a little bit. But this is a market that's been in full-on rate cut mode.
Yes.
And what's so interesting is I looked back to last year, and we sat here a year ago in these very chairs overlooking this beautiful ocean, and stocks were at record highs.
Yeah.
And the Fed was literally on the cusp of cutting rates for the first time as part of this cutting cycle. And here we are again.
It's a little bit Groundhog Day-ish. I totally agree with you. I think what's changed is that we've had incredible earnings growth, especially in NASDAQ 100 names, S&P 100 names. I don't think sitting here last year we could have been as confident as what actually ended up happening. Just tremendous growth in the AI theme and a lot of the ancillary companies that are not necessarily tech, but involved in the build-out. Stephanie's been talking about the industrials all this time. We've mentioned the utilities. We had no idea that the next 12 months would include so many companies from so many industries beating earnings. We had a great earnings quarter this past quarter. So that was all still up in the air. But listen, that explains what the market has done from then till now. What's going to happen going forward? There's a really interesting trade happening in the financials and in anything home building or mortgage related, which I know we'll touch on later. That could be the next leg of this market. Not to say the AI theme will peter out, but it's really nice to have a new group of stocks that are joining the party. And I think that you can make the case that's what the month of September was all about.
This is a rate-cutting rally, Steph, right? I mean, we've priced a lot of that in, do you think, at this point? Because that's what it feels like is what the whole conversation is about. We know that the Fed, or at least we think, we're a pretty good handle on the fact that the Fed, if they don't cut next week, there's going to be a lot of surprise, I think, in this market.
They're going to cut. They're going to cut next week for sure. The question is, how many more are they going to do? Are they going to do 2? Are they going to do 3 this year? But they are cutting. And there is that old adage, you do not fight the Fed. And I would say that the market is acting very well because the economy is actually holding up remarkably well. We're running at 2.5%, 3% GDP, led by the consumer. All you need to do is listen to the Barclays conference this week from the banks. Every single bank company executive talked about the consumer being very strong. And it's because they have jobs. I know it's cooling, it's not collapsing. They have wage growth at 5%. And then also you have business spending. You're running at about 10% annualized spending growth from businesses. And it's not just AI and data center build out. It is capital goods. It's the industrials that Josh just mentioned. And so to me, the economy is doing well. That means the earnings picture is going to continue to do well. And I think you're going to see double-digit growth this year and mid-single-digit revenue growth with margin expansion, which is really very, very important.
Shan, the chart we're showing on the screen right now, NASDAQ, I mean, look at from the April lows, it's really been the story, certainly of late, that money has just started to flow back into this space. You could maybe, in terms of the last month, suggest, well, it was the news around Alphabet, the regulatory relief around that name that sort of started this next leg, right?
Well, I think it's the news around Alphabet, Scott, and I also think that there has been a dogmatic approach to investing in tech over the last couple of years in terms of those who haven't been keyed in on the AI story have been talking about valuations. And the challenge is here is that that was predicated on the fact that it was expected that earnings for big tech would slow more markedly than they have over the last couple of quarters and into the second half of this year. So the rotation story was really around, we're going to see some compression in tech earnings. We're also going to see some stronger earnings in, 493 stocks as well as small and mid-cap stocks. Instead, what you're getting is you're actually getting stronger earnings than anticipated in tech, along with the growth in earnings from those other parts of the market. And so it's no longer an either-or trade, but investors feel a lot more comfortable that U.S. stocks collectively are probably a good bet for the second half of the year. And you've got those tailwinds around rates and capex that Steph already mentioned.
It's definitely been more bifurcated within tech lately. And the Alphabet news seems to be the line in the sand. If you look at the 1 month performance, for example, of Alphabet and some of the other names relative to Microsoft and an NVIDIA, I mean, it's pretty stark, the performance in 1 month. Alphabet's up 17%, NVIDIA's down 8.5%.
Yeah, one of the things that's so interesting about what's happened in big tech this year is we've had this kind of rotation within the Mag 7 names. So like Apple is now in bull market mode. It hadn't been for, 4 or 5 months straight. The Alphabet story has been revived thanks to, obviously, regulatory stuff. But there were a lot of bulls pent up waiting for a reason to buy the stock because it was the cheapest among the Mag 7. A little bit of good news didn't take much. And some of the other names like NVIDIA and Microsoft take a breather. But that intra Mag 7 kind of rotation is what keeps the market where it is. You don't need all of these stocks going up all the time. That's good enough to hold up the NASDAQ, hold up the S&P 500. And it's frustrating for the bears. They want to see all of them go up or all of them go down all at once, and that's just not the way the market acts. That story where money comes into index funds and just indiscriminately buys the 10 biggest stocks, literally no. You can see it on your screen. There is money moving between them, and I think it's healthy.
The question over, as Steph, these stocks have gone back up, the valuations continue to climb as well. UBS had a really interesting note today. Tech valuations, while higher, may not matter as much right now. They say this is only the 5th time since 1950 that the S&P 500's forward PE has started above 21 times. Yet history shows that an elevated PE alone rarely dictates short-term market direction. I can't tell you how many times you guys have said stuff like that, right? Valuation, it's not insignificant, but if you're making all of your investment decisions based on valuation, you're making the wrong move. Now, valuations do matter if everything around mega cap tech, for example, starts to slow down, which Goldman Sachs is talking about today, too. Hyperscaler capex growth is going to slow beginning in Q4. They gave us a chart as well, or at least put that out as part of their note. A reversion, quote, back to early 23 levels would imply 15 to 20% downside to the current valuation multiple of the S&P 500. How do you judge all of that together?
Well, I think, I was looking at my notes because the companies, the Mag 7, and now with Broadcom, Mag 8, all of the earnings estimates have actually gone higher post-earnings. almost all of them beat expectations, and the free cash flows all rose substantially. I do think you're going to see a slowdown in the spending for data centers because you can't grow $400 billion every single year. But that doesn't mean that the trend is over. And again, these companies are delivering in spades. So yeah, they might be expensive, but then you have these earnings revisions, and we know that stocks follow earnings revisions on the way up and on the way down, and they're all going higher. And so I think you do want to be selective, and I only own Amazon and Meta, and I own Broadcom. I'm happy with all of those. I don't think you need to own all of them. You pick your spots, but all the numbers are going higher, and that's a good thing.
Yeah, and that leads us to Apple. It's rallied a lot over the last 3 months, really after being sort of a sideways trade. This stock has definitely picked up, and it's right ahead of that event they're holding today on the iPhone, 1 p.m. Eastern Time. Dan Ives, I told you, of Wedbush is out here with us, too, at Future Proof. We welcome him to the conversation. It's nice to see you.
Great to be here.
You know, some have said this is the most inconsequential, if not insignificant, iPhone event that Apple has held in arguably many, many years. Is that how you see it, too?
Yeah, look, I'd say it's, really apathy from an investor perspective going into the event because there's really no major hardware changes. I mean, obviously a little thinner, probably going to be about $50 to $100 more given maybe some of the tariff issues. But the reality is that the elephant in the room continues to be AI when they double down the Gemini partnership now that the DOJ stuff's cleared. Cook's played great in the sandbox in D.C. now, with Trump, and that's removed a part of the overhang. And look, Scott, my view is like expectations. If we thought back a year ago, super cycle, which really obviously was a little disappointing. Now, you have 315 million that haven't upgraded their iPhone in 4 years. Expectations are very low. And I think the sentiment combined with what ultimately is going to probably be an AI catalyst, I think Apple, we sit here a year from now, and Apple's probably, a stock that I believe is probably 30–40% higher.
I mean, the reason why 315 million people haven't upgraded their phones in over 4 years is because the company hasn't given them a reason to do so.
Yeah. Look, it goes back to every Apple event. I mean, you've been many of them. I feel like Michael J. Fox, Back to the Future, right? I mean, it's been sort of, they've missed so many of the sort of AI trades that you're seeing. But I do believe clock struck midnight. Cook and Cupertino recognized it. They waited for that DOJ situation. That's cleared. Now it comes down to they walk down the aisle with Google and Gemini in terms of that huge partnership. And that really also takes out the chance that Perplexity.
Do you have an estimate on how many people will upgrade on the 17? Do you think it's a big number?
So we think right now, if you look, ultimate expectations are you have about 7 to 8% iPhone growth. With you're probably going to have 225, 230 million units that they sell. Look, and I like that setup. The expectations relative to the stock. And iPhone 17, the big key is going to be China, because you have 100 million in China that have an upgrade, starting to see some sentiment improvement there. And I think right now, look, overall, even though you've had a move here, I mean, the cab driver here in Huntington Beach is negative and bearish on Apple.
You know what the deal is? Those people you say who are bearish, they're just not talking about the company nor the stock in ways that they used to. That may be the biggest problem that Apple has right now.
Yeah, I think it is a problem, but it's a sleeping giant. You have the biggest install base in the world, 1.5 billion iPhones, 2.4 billion iOS devices. And that's why I continue to think Cook, every time you count him out, and there have been some called for, maybe he's not going to be the CEO to lead into this next era. I believe he is. And I think they've been late. But guess what? You could be late when you have the best install base in the world. And that's why I believe ultimately this is probably stock risk reward on large cap. It was Alphabet. Now, this is probably more the table pounder relative to the next 6–12 months, given some of the catalysts that could happen.
As a shareholder, do you believe that?
I hope Dan's right. The problem with Apple historically has been, okay, we understand it's a sleeping giant. At some point, there will be this upgrade cycle. But how much of that is in the stock? What's your PE on next year's numbers? Is it 31, 32 right now?
Yeah, but I also believe the one thing, if you just look at it straight PE, I think what you're missing is what the AI opportunity, $100 per share, could be to Apple. And I'd factor right now, like no one is factoring that in with that ultimately.
An additional $100 per share from AI?
I believe.
How do you or from multiple expansions?
The monetization is going to be about 70% of that's going to come from. They're essentially going to build an AI app store that I believe is ultimately going to be the highway for AI when it comes to the consumer. And I think that will ultimately be the super cycle that plays out. You could be wrong in a year. And I think, Scott, what that does is if you look at numbers, street you look at in the next 2 to 3 years, you're probably underestimating where numbers could go by 30%.
Steph, you have skepticism around that? I mean, you had
Yeah.
this stock.
I don't own it, and I wouldn't buy it here after the rally it's had. I just don't think they're anywhere to be found in terms of AI. I can pick a whole bunch of names in technology that have AI and are benefiting from it and are monetizing it. And I go back to Broadcom. That's one of the reasons why the stock has totally re-rated, because they did get AI right. So I'm not saying that AI, they're not going to get AI. Dan, but I just don't think I don't think you're going to see a super cycle on 17 because they don't have it. So I think it might be 18, and that's fine. They'll get it eventually, but it's not 17.
Yeah, good point.
All right, well, we'll see top of the hour. And we'll talk to you again. Dan Ives here at Future Proof. Thank you so much for that. Let's spend a moment talking about the banks, too. We did mention it a moment ago. They have been trading, as you know, at record highs. Goldman Sachs today reiterated overweight at Wells. Bank of America overweight also at Wells. Stephanie Link has that name. There's been a lot more optimism around the deal market and M&A. Private equity hasn't traded well, though. One of the spots that you would say, well, if there's more optimism around deals, why wouldn't private equity be right in the mix? Blue Owl over 1 month down 9%. Apollo down 5.5%. KKR down 2.5%. Stephanie Link, you sold the stock.
Yeah, KKR, I'm up 10% in the name, so I bought it when it was down almost 20%. It's a great company. It's not cheap. I think the banks are so much more compelling because you do have them benefiting from the steep yield curve, deregulation. You also have M&A. M&A right now, year to date, $2.7 trillion, Scott. Completed M&A transactions are up 40% worldwide, and in North America, up 102%.
Yeah, I know. Why aren't you buying more of KKR rather than selling it?
No, because I think the banks actually are going to benefit, and they're cheaper, and that's how I'm playing it. So KKR is a fine company, and yes, capital markets recovery will help them too. But the private market stocks, they've done so well over the last several years. I think there's a catch-up trade with the banks, and I do think the valuations. I know that they're at the high end of the price to book, but I think you're going to see a massive re-rating in these stocks. And that's where I want to be putting more money.
Shan, I'll give you the last word on this. And just to remind everybody again, Leslie Picker is going to be live with JP Morgan's Jamie Dimon coming up on this very program in just a little bit. So you don't want to miss that. But what about your take here?
I think that there definitely was some pull forward in some of the private equity names in terms of the anticipation of a deregulatory environment, lower cost of capital, and everything that was coming into this year. I do think that there's probably an opportunity for both to win from an iBanking perspective on the traditional banks as well as the private equity providers. Announced M&A is increasing, but you need to start seeing deals being closed en masse to really be able to monetize the portfolios and be able to get that second run for the private equity names.
Okay, so we are back live from Future Proof here in Huntington Beach, California. Said Josh Brown, this is your big event. You want to give people an idea of what actually is happening behind us in these tents off the beach?
Absolutely. So basically what you're looking at behind me is a representation of the future of wealth management. There are 5,000 people here attending the event. The vast majority of them are people working in wealth management, wealth tech, software, all of the custodians, the brokerage firms, the asset managers. Everyone's here to try to figure out and how they can learn from each other what's happening, how are you having success serving clients, and what am I not doing within my firm or within my practice that could give me that competitive edge. We are probably the fastest growing segment within wealth management, the RIA segment, but we're joined by people in private equity, people at wirehouse firms. Everyone's here to try to get better at what they do with the goal of serving their clients to the best of their ability.
You've really turned the conference model on its head, so to speak, especially trying to reach a younger cohort of investors and financial advisors, for that matter, thus the setting here off the beach.
Well, in year one, they looked at us like we were crazy. We said we're going to do an event, but it's not a conference. It's a festival. It's all outdoors. They asked, is this Fire Fest, and are you the new Ja Rule? It didn't go that way. It worked. So the growth has been incredible and lots of potential. And it's not really about me. It's not about Ritholtz Wealth Management. We were, the founding team that created the idea. The event is about the advisors, and every advisor here has a story. What are they trying to get better at? Whether it's portfolio management or practice management or segmenting their time, or how do I hire people? How do I train the next generation of advisors? Everyone here has what they're looking to get out of the event, And we're just happy to be here and to support that effort.
What is about you is your best stocks in the market list,
That's all.
Well, it's
right.
become a thing, and it's on CNBC Pro, and it's an important and growing part of that. You want to highlight a stock or two, and why did you pick the names that you have here?
Yeah, so this week, my writing partner, Sean, and I took a look at some of the bigger winners from the list. And of course, they're not all winners. We get stopped out of names all the time. But these are some of the names that have just continued to run. And we wanted to give people updates who took these trades. Al Nalam has just been outrageous, up, I don't know, 50% or so since we wrote it up. I wanted to tell people I like this pullback. There's a little bit of consolidation around the 450 level. If you go to the company's investor relations page, you just see a wave of potential catalysts coming up. And so if you want to keep riding this name, I think you can do so. The pullback has been orderly, and it's found support exactly where it should. eBay, which I pitched to Al Michaels on this show, eBay's been a winner. I'm looking at $86, which is the rising 50-day for risk management here. If you get a violation below that level and you're a shorter-term trader, that might be the time to get off this horse. More patient investors could wait till about 82. If it gets below there, it gets a little bit sloppy. I'd walk away. The last one is Carvana, another huge home run. Carvana is about 6% above its 50-day right now with a 58 RSI, so it's cooled off. We've seen the company consolidate over the last couple of months, but it looks to me more likely that we'll see another leg higher. From a risk management standpoint, I would basically say, look, this is an extremely wild stock. I probably wouldn't worry as much about stops. The way I would risk manage Carvana is by position size. You don't need to own a lot of a name that's got a beta coefficient of 3.5. That means it is triple as volatile as the S&P 500. So position size risk is an underappreciated way to ride a name like that.
All right. Arguably the biggest news of the day. Beyond the NASDAQ hitting a record high,
Which is nice.
beyond Rick Reeder saying the Fed is going to cut and should do 50, is the wall that we've made. It is the Shake Shack new French onion menu. I wanted a breaking news banner on this. They wouldn't do it. It is launching on the app today and in stores on September the 12th.
Yeah.
This is one of your most loved stocks. It has been one of the most delicious names in your orbit. What do you make of this news?
Well, look, it's funny, but it's also a true driver of foot traffic. People come to the stores on these drops. We know this from a lot of the things that they've done over the last couple of years. It's something that started before CEO Rob Lynch, and he's now like doing weapons-grade product rollouts, and people are super excited. I want to talk a little bit about the burger itself, Stephanie. Try to contain yourself.
Oh, my God.
Gruyere cheese, caramelized and crispy sweet onions, a garlic Parmesan aioli.
You going to join me on the treadmill?
No. Yeah, while I eat it. Look, I think this is like an underappreciated part of the story is the innovation. They're doing things that are far and away more exciting than any of their competitors. And I think the share price over the last 5 to 10 years reflects that. They've got pretty much all of the ingredients, pun intended, that you need to be a multi-year growth story. And I remain long the stocks.
Steph prefers Chipotle. Quite literally in her portfolio over Shake Shack, right? That's the stock you have.
I do.
The target today goes down by $5 to 60 from 65. Stifel still likes it and says you should buy it. They did cut their estimates, though, on the comps tracking below estimates. What do you make of that?
Yeah, I mean, I think this is really more of a second half of the year story. They do have a whole new products slate coming. They have really done well in terms of digital. They still have store openings, and they have industry-high restaurant margins. It's been a tough stock to own, no question about it this year. But the stock, the valuation is getting even more compelling. It's really not done anything, and you have easy comparisons also ahead. So I think you have a recovery into the end of the year.
You hired your own promoter, so you don't need Live Nation for future proof. However, you love the stock.
Yes.
You have liked the stock.
Yes.
It's up 31% this year, and the target goes to 195 from 165. Buy reiterated at Citi.
Yeah, so I started buying it at 70, and at a certain point on the way up, I trimmed, took a little bit of profits, but I've kept my position here because it's really a crown jewel. What Michael Rapino has been able to accomplish here, even in the face of lawsuits and issues with the government, is just extraordinary. And I think it's a testament to the business that they're in. It's more about the musicians and the fans than it is about any one company. But this happens to be the best way to see a live show is to go to a Live Nation event and use their ticketing service. And look, everyone wants to pay a cheaper price for tickets, but at the end of the day, when your favorite artist is in town and Live Nation is facilitating it, it just works. You get there. Look at all the people that went to see Oasis 2 nights ago here in California. It was an unbelievable event, and we see that repeated all over the country, and Live Nation supports that.
Lastly, Steph, Zoetis reiterated a buy today, 190 at Argus.
I like animal health. I would say that I prefer Elanco to Zoetis at this point because it's much cheaper and it's a turnaround story. But animal health, we're going to spend $150 billion a year on animal health and wellness, and I think you definitely want to have exposure
this year. Why is Zoetis down 7.5% this year?
It's been uneven in terms of their earnings. Very high expectations, very expensive stock, but I still like the theme, and I don't think, one bad year in terms of performance, I just don't think that. I think if anything, it's probably getting closer to being a buy, but I like Elanco better because they have a better product rollout coming, and that stock has done really well this year.
All right, we'll take a quick break. We'll come back with finals next. Looks to us like stocks are basically at the highs of the session. It's been kind of a volatile session, Shan, but you just heard Jamie Dimon talk about the economy slowing, the consumer slowing, but the flip side of that, Fed's going to cut, and that seems to be where the optimism is. Where is your final trade heading today?
China. Dan Ives actually touched on it. Expectations are for an improving consumer in China, and there's a number of different ways to play that.
Wow, okay. Oh, what's your best way?
I think, in terms of a China ETF, or Apple's a great example of a way to play that.
Thank you. Stephanie Link.
Lennar, I still like housing very much. I don't own it yet, but the valuation is very compelling.
And Josh Brown.
I like housing too. Rocket Company's new 52-week high right now, just added to the best stocks in the market list as well. I am long, and I'm loving it.
All right, good stuff. Thanks, everybody. The exchange is now.
Hello, welcome to Blue Cloud Trading. My name is George. It's Tuesday, September 9th, 5:18 p.m. As I'm recording this video, we saw Josh Brown and guests on the halftime report. That's from today's episode. And yesterday, Tom Lee was on Squawk Box, so I thought I'd include some that quick little clip from Tom Lee because he did talk about crypto quite a bit, and we're going to look at his ETF, GRNY, in a few moments. But before we get into those stocks that were discussed on the show, on the halftime report as well, I want to show you guys how the markets performed today. The Dow was up 0.43%, so not too bad, right? It was actually flat a little bit in the morning, and then it started to pick up 0.43%. The NASDAQ, it actually dropped and got under the prior day's close, but then corrected, and it was up 0.37. S&P 500 did the same thing, was up 0.27. These are not big moves or anything, but the fact that they're up, that's positive. The Russell 2000 actually down 0.59%. It dropped and then basically stayed under the yesterday's prior closing price. Okay. As far as the advancing stocks versus declining, it seems like there are more stocks in the Dow. Total stocks declining 56.1% versus 40. But there are 69.8% of the stocks are experiencing new highs. And about, 58% are above the 50-day moving average. Over here, you can see that about 54% are above the 200. So that's good. We're going to look at the heat map here next, and that's going to show us how the individual stocks within the S&P 500 performed. So let's take a look at this. And what you'll see is NVIDIA was up 1.46%. Google and Meta were up. Amazon was up. Palantir was up 4.01%. A lot of the financial stocks like JP Morgan, Bank of America, Wells Fargo, Citigroup, they were all up. Eli Lilly was up. Morgan Stanley and Goldman Sachs were up. UNH, CVS was up. But the industrial stocks didn't do so well today. Energy stocks look pretty good overall. Basic materials were down. And let's look at the sectors, actually. So which sectors were the strongest today? You can see it was communication services up 1.55%. So that's a big move up for the communication services stocks, and then utilities, then energy. And then for the worst, basic materials, industrials, and real estate. Okay, let's get into the actual charts now. We're going to start off with the S&P 500, but we're going to look at these ETFs, folks. The QQQ, Dow, Russell 2000, the VIX, the Euro stocks, FEZ, and then there's about 15 stocks or so that were discussed on the halftime report that we're going to look at. We're also going to look at GRNY. That's Tom Lee's ETF. We'll also look at some of the Mag 7 stocks, the ones that are not in the Blue Cloud portfolio. And let's see what else. Sectors. These are the sectors here. We're going to look at the strongest ones only. I've got them flagged with a little blue flag there. And one of our members requests the stock is BILL is the ticker symbol, Bill Holdings. Okay, that's the weekly chart and the daily. We're going to look at those too. So let's start off with the SPY, like I said. And once again, price holding up above the moving averages. We're talking about the Tenkan-sen. The green line is the 9 period, the midpoint of the last 9 periods. The red line is the Kijun-sen. We're using the Ichimoku indicator here. The Senko Span A is the top part of the cloud, and Senko Span B is the bottom there, the light colored blue line and the purple. Those are in the correct order. We don't want that Senko Span A under the Senko Span B like it was back here. Remember, it also projects 26 periods into the future, right? And then we've got the Chiku Span, which is the white line there. That's the closing price, today's closing price, right there, projected 26 periods ago. And we want to see where that is in relation to the candle. Okay, price 26 periods ago. And if it's above, that's bullish. So those are the elements that we're looking for with Ichimoku, which stands for at a glance. And at a glance, the SPY looks good. We've got the directional movement index down here as well. And that's also looking pretty bullish overall. How about the QQQ ETF? And we're looking at the daily chart right now. The Qs are looking pretty good too. The only negative thing is today it looks like the Tenkan-sen crossed under the Kijun-sen, just barely, but it is holding up above the 2 moving averages. This might just be a little bit, because here's the thing: tomorrow it's going to be it will be a determining factor of whether or not, if price can get above that high from that candle there, this should cross right back above. So I'd be watching that very closely. Right now it's kind of stuck in this little range that you see right there. The Dow Jones, all right, also kind of stuck in a consolidation zone. See this high right here? If you go back in time like that, you can see that for multiple days now, right? About 2 weeks we've been stuck there, a little over 2 weeks actually, just in this price range. But price is above the moving averages. Price is above the cloud. And there you go. The Chiku Span right there is above price. Let's make that chart bigger. Here's the Dow Jones. Also looking pretty good here. And yeah, above those moving averages, right? It's above the moving averages and above the high there. Russell 2000 pulled back a little, down 0.59%, but as you can see, it actually did hold its own, right? There's the 9 period. It bounced off of it. There's a little bit of buying happening once it reached that level. And we can see that on a 5-minute chart. Okay, so there's the little buying that happened. It started so it dropped down to 235 and then closed at 236.83. So that's and it got popped back above the cloud on the 5-minute chart. But yeah, it was down nonetheless. And then what about the VIX? The VIX dropped again, down 0.46%. It's been hovering in these levels around 15 for a little while now. That's good. We don't want that to be spiking anytime soon. FEZ, the Euro Stocks ETF, also up above the Ichimoku cloud. But like the Qs, the Tenkan-sen crossed under the Kijun-sen. There's the QQQ. Same thing happened here with FEZ, the Euro Stocks. Is that something to be concerned about? Yeah, I think so, a little bit. It's not like we're seeing a huge move here in these markets. You can see the ADX, that represents the momentum. That white line, if that's declining, that means there's not really a lot of momentum here. That's okay. We want to see that moving up. We want to see the green line moving up. We want to see the red line moving down. And you can see the green line is actually moving down there. So it's just kind of stagnant. I guess that's the best way to describe it. You can see that it's kind of stuck right there. All right, let's take a look at the stocks now. And these are the stocks they talked about on the halftime report. And so I basically highlighted the strongest ones of the bunch, these right here. So if you look right there, there's about, I don't know, 7 out of 15. These are the ones that I would focus on. Even though some of these were down, like AVGO was down 2.6. Would I be adding a position on a negative candle like this, a bearish engulfing pattern, which is these 2 candles right here, where you get the larger red candle drop, basically engulfing the prior bullish candle? The answer is no, but it is holding above the moving averages and it's above the cloud. And that applies on the weekly chart too. Okay, there's the weekly chart. What about ALNY? ALNY, back on August 19th, Josh Brown had mentioned that he had talked about this stock. Here it is in the daily chart right now, breaking through that 469.81 level from August 22nd. So he recommended it back here, and it's moved up a little, over 5% right now since that breakout that occurred today. It was a 5.96% move. So that's good. It looks pretty bullish. The only negative about this company is it's still, negative profit margins, negative 12.96%. That's something you have to determine if that's something that you're interested in buying a stock that where the fundamentals aren't there quite yet. CVNA is Carvana, another stock they talked about on the show. This one's been stagnant also. It's been stuck in a consolidation right there. See those multiple candles? Right, so they can't seem to break through that 378 level, which is 378.54. So that's what I'd be looking for. Okay, it's based on that candle right there. It's still under there. LYV is Live Nation Entertainment. That one has been doing pretty well. I had a position in this a little while ago. I did close out of it. Was, looking into other stocks, and hey, this stock continued to move up. So it's doing quite well. LYV, here it is on the weekly chart as well. All right, I like it. ELAN, Elanco Animal Health Incorporated, here it is on the weekly chart. Very strong, right? Future bullish cloud is good. It's above the 200-day moving average, which has been declining. Now, the thing with something like this, so look at that steep decline. See how steep that decline is in the 200? A lot of times price will break through, but then like a magnet, it will come right back to retest that 200. And it could potentially drop right back under. I'm not, but, that's the thing. We don't know exactly what's going to happen here. The good news is it did, in fact, break through this high, 3 weeks ago. There's that first, second, and then this week here. So it's looking pretty good on the weekly. Here's the daily chart. So it's in a strong uptrend. And it's, its highs were somewhere around this range here, around 30, what was that, 37 or $40, around 30, hold on, right there, 37.49 was the high, around $40. That was back in 2021, and right now it's at $18.76. So you would, in fact, be buying this at a discount. The price of sales is pretty reasonable at 1.58, and unlike the other company, this one is profitable, up 9.68%. MCHI is the China Index Fund. That was one of the guests made this their final trade. Technically, yes, it's looking pretty strong here on the daily chart. You can see it's above the clouds. It's above the moving averages. It's obviously in an uptrend. And same thing on the weekly chart. Okay. Again, we've got a declining 200-day, but the cloud itself is moving steadily up, and the ADX is moving up. RKT is Rocket Companies, Inc. And this one, too, looking pretty bullish. Again, profit margin is negative 0.01. Operating cash flow is negative $2.1 billion. And their sales growth rate has dropped 21.29% over the last 5 years. So, I don't know. It's maybe it will start to pick up if interest rates, of course, start to decline, with the Fed. So it's going to make it more easy for people to borrow. So we'll see if that has an impact. But 0.25% reduction in the rates is not going to make a big difference, I don't think. Honestly, it's not going to change people's buying habits as far as buying a house, for example. KKR. So Brin's final trade, that was back on June 27th. This one here is inside the Ichimoku cloud. Okay, so it entered the cloud back here on, what day was that? That was a weekly chart we're looking at here. So that's a weekly chart. Multiple weeks it's been basically declining. Let's look at the daily. Yeah, it's also inside the cloud. So I'd skip this one, folks. Don't, it's obviously in a decline. It's in a downward channel. Okay, right there. So no on that one. APO is also in a decline. All right, that's the Apollo Asset Management, Inc. This is the daily chart you're looking at here. So you want to I don't know if you want to be jumping in here because this could certainly continue to drop. There's certainly no interest at this time. You're not getting a lot of interest in buyers, and it's obvious because the price is declining. It's basically just supply and demand, and when there's more supply than there is demand, guess what? The price is just going to drop. eBay also, Tenkan-sen is under the Kijun-sen right here. That crossed under 3 days ago. That was on Friday last week, and it's down 0.60% today. I also don't like what I'm seeing down here with the negative DI moving up, positive DI moving down. Even though the ADX is still dropping, that's not a good sign either. The last time that occurred was over here. I'll show you guys, right? See that? Whoops, hold on. Right there. See how the negative DI started picking up and the green line was moving down? If we go straight up, you can see that decline, right? It also occurs when you have a negative crossover with the red line just crossing above the green line right there. If you go straight up, you can see that happening on that candle, right? It also got under the Tenkan-sen. So no. And then we also got another earlier sign that, you know, this momentum, this move up was starting to decline. We got that by looking at the ADX right here. See that white line? See how it was moving up steadily and then it started to drop a little bit? So that started happening right around that point. If you look up, you could have got a nice little warning like, hey, the momentum is starting to drop. And you can see that momentum dropping because it was consolidating. You never know which way it's going to go. When it starts consolidating like this in a box, the reason why you don't want to buy, even though you can see here it's been steadily moving up, the reason why you don't typically want to buy when price is in consolidation is because you don't really know if this is going to be a continuation or not. You won't know, in fact, until price breaks above that level. Okay? And over here you can see it closed underneath with that big red candle, which led to that decline. And now it's just dropping. All right, let's keep going. Shake Shack, also in a decline. Even though it was up 0.76%, it's currently under the cloud, under the moving averages, so I would not be touching this. And there it is. ADX is moving up, and the negative DI is moving up. Positive DI is moving down. We've got a setting of 9 here versus the traditional 14 setting. And I wouldn't be jumping into this one for sure. Here's Chipotle Mexican Grill. This one's been in a very extended downward channel that you can see right there, right, from these trend lines. And look what's happened. It also broke through. It also broke through this low right here. That happened yesterday, or the day before. Actually, yesterday. No, the day before, on Friday of last week. That happened on September 5th. That tiny little candle dropped under the lows here. And then boom, it continued to drop. Okay, so from that point, it's actually dropped about 4.6%. And this is what I'm talking about. You can see that we are not, the momentum is to the downside, not to the upside. What you're looking for is a change in direction, a change in the sentiment. And the sentiment right now is negative. Zotis Inc. is another one they brought up on the show. No on that. Look at that declining 200. Right there. It came to the cloud, found resistance at the cloud, and dropped. It's now currently under the cloud. All right, let's keep going. So here's the thing, right? When it comes to, now I also like to look at both the daily and the weekly chart. So here's the weekly chart. It's very bearish. It's been under the cloud for many, many weeks. So yeah, that's another thing you want to pay attention to is how does it look on a higher time frame like the weekly chart? Well, let's look at this one, LEN. This was Bryn's pick back on August 30th. Let's look at the daily chart so we can find that specific date. August 30th. She recommended it. Was that in 20? I think that was from 2024. Sorry, that's an old one, guys, because the note was back here. Yeah, I should get rid of that. But August 30th. So, I mean, if she recommended it this year, and I don't recall, to be honest with you. But if she did, that was a pretty good call. Because here we were on... No, she wouldn't have... that was from that year, because August 30th was not a trading day. You can see Friday was August 29th. This year, yeah. Then we had Tuesday, September 2nd, because we had a holiday last week on Monday. So that was from 2024. But it's been doing okay on the daily chart. But if you look at the weekly chart, it's reached its target essentially, right? Came up, and now look what's happening. It's stalling. So there's a good chance it's going to pull back, even though the ADX has been moving up. This is a very important level of resistance, the Ichimoku cloud. We'll see if I'm correct. I mean, there are times when it will break the cloud, but it doesn't seem like that. It seems like it's stalling there. This is Tom Lee's ETF, GRNY. So how's that doing? Well, it was introduced back here in 2024, November 8th, 2024. Since that point, it's moved up 18.67%. From what I understand, there's over $2 billion in this ETF right now, GRNY. It's mostly large cap stocks, okay? So some of the big names, basically. But it did have a pretty big decline here. You can see that it had dropped initially as low as 25% from November 8th to April 11th, around 25% or so in 5 months. And then, of course, it's recovered just like the rest of the market, right? So it's done pretty well. So it's going to be impacted if the market starts to drop overall. The large caps are you'll see that in GRNY as well. All right, let's see. And this is the weekly chart. Let's look at the daily on GRNY. You can see it's a very extended, and this is what I'm talking about. When you've got these, now this can be a really bullish thing once price breaks through. Once it breaks through, it has not broken through that box. Right now, we're just kind of going sideways here. So this is not like a super strong rally that we're seeing in the market. That already happened. September, October, November, okay, tends to be, not seasonally speaking, negative. The majority of the time, most years. Now, Tom Lee is very bullish, though. He thinks that we're going to break through. So maybe he may be right. You never know. We will see it on the charts, and that's the beautiful thing about Ichimoku. You can see it on the charts, and you'll know exactly what's happening. And there's no correlation, by the way, between how the economy is doing and how the stock market is doing. Just keep that in mind, folks. There's no correlation at all, for the most part. So that's why, you start seeing the stock market is doing really well. It doesn't really mean that the economy is great. There could be a lot of losses in jobs. There could be, prices. There could be inflation. There could be all these things happening. But when the Fed is forced to reduce the interest rates, that's going to basically pump up the market even more, because then, the wealthy tend to put more money into the market, right? And because they've got nowhere else to go. And so the market just basically continues to move up. All right, so we talked about all these stocks. Let's take a look at the Mag 7 that we've got here, this list here, like Tesla, for example. And let's look at the weekly chart. Here it is. Last week on Friday, it broke above the cloud. And that's a bullish situation. The only problem, though, and this is a concern of mine, is the cloud itself is bearish, right? So Sankospan A is under the Sankospan B. That crossover took place right there. So that's not typically conducive to I want to see this crossing above the Sankospan A, which is the midpoint of these two moving averages. All right, that's where, and it projects 26 periods into the future. I want to see that getting above the Sankospan B. What's the Sankospan B? The Sankospan B is basically the midpoint of the last 52 periods here. Okay, the midpoint. So that's why you'll see it flatten out sometimes. It's the average, the highs and lows divided by 2. That's how that is That's how that's derived, and how that's plotted. Now, if we look on the weekly chart at the Chikou span on Tesla. Now, let me just get rid of all these other lines for a moment. Let's look at the cloud itself, and let's get rid of this too. We don't need that anymore. Okay. So the good news is that, yeah, the Chikou span now has been above for just 1 week, right? It's been above for 1 week. Right here, it was still inside the cloud. This is the first week where Chikou span is above. And it's most likely going to stay above, because it would have to really drop significantly in order for it to get back down under. We had the positive crossover on the weekly chart, the Tenkan-sen crossing above Kijun-sen. But you know what I think also needs to happen is we need to take out this high, which has not happened, right? So we've got an ascending triangle type pattern that's forming, which is bullish, and maybe it will turn into something, but I don't think it's going to happen this week. And here's a daily chart, right? So these moves up, I mean, it's just, you know, basically not really. Look at these highs. They're very close to each other, and they seem to be slowing down a little bit almost. Do you see that right there? I don't know. It's just not looking that particularly bullish to me. And then you've got these highs that haven't been taken out, and then also these over here. So I don't know. I'm just not sold that this is going to take off. And look at it. It was only up 0.16% today. What about Apple? On the daily chart, pulled back, found support at the Tenkan-sen, stalled right there. 3 days in a row, it's been dropping, down 1.48%. So, yeah, it looks bullish still because it's holding up above the moving averages on the daily. On the weekly chart, you know, the Chiku span is inside the cloud. Oops, right here. See that? The white line is inside the candle. So, no, right? And then, again, if you look at the cloud itself, this one looks a little bit better than Tesla's because it looks like it's ready to pop and cross above. And the Chiku span does as well. So Apple could see something. But again, you may want to wait just for price to also get above. Let me show you guys a level. Oh, there's a trend line that was broken here with this big candle and it's been moving up. But it's also we're also going to find some resistance. Let's get rid of that for a moment. And that. We are going to find some resistance here at this level. The high is 250 exactly. All right. So $250. How far are we from that? We're about 6.22% away. And we're going to find some resistance at 260.10. And then we'll be hitting the all-time highs basically. So the question is, will this materialize into something? Because here's the problem that I'm seeing with this chart also. From a purely technical, without using Ichimoku, you've got a lower high here from the prior high. That's bearish. And this high so far is still lower than this one. So there's a series of lower highs. All right. And we haven't really, like you can see, this has just been moving up. It hasn't really moved up, then pulled back to create a higher low. That hasn't happened yet. So we still have a lower low here than the prior low. All right. So my point is, we got a series of lower highs and lower lows. That's not conducive to an uptrend typically, but there has been some strength recently. And if you look at this, we're talking about just the weekly chart now, but if you look at the daily, we do have that. Okay. So that's why Apple has been showing some strength, because it has been creating a series of higher highs and higher lows. The question is, do you want to just rely 100% on the daily chart, or do you want to also utilize the higher time frame, which is going to give you a more optimal sort of bigger picture, right, of the how price has been performing, right? So personally, I like to look at both time frames, weekly and daily. I'm looking for confirmation on both. Once I get that confirmation, then the stock will get the blue flag. And so that's just my rule. Here's Meta. Okay, so the problem here is you get the faster moving average. 9 is under the 26, even though price is above the moving averages. That's the daily chart. And here's the weekly chart, looking pretty bullish. So, you know, it just needs some more work still. What about NVIDIA? That too is the Tenkan-sen and Kijun-sen are actually at the exact same level. You can see that the crossover took place right there, and then they've just been basically right on top of each other, right? So, you know, price has been stuck inside the cloud. Was unable to break it today, even though it was up 1.46%. So yeah, it's just been dropping. Okay, it's been dropping, and the ADX is moving up. Negative DI is still above the positive DI on the daily chart. So, what does it look like on the weekly? It's you know, price has been 2 weeks now. We're still under the 9 period, and the ADX is dropping. So that's why you should be a little bit concerned if you know, about, I certainly would not be adding new positions here. That's all I'm suggesting, is like, it just doesn't make sense quite yet. We might get some bullishness next week, but until then, I would hold off. Here are some of the other strongest sectors. XLB on the weekly chart, holding up above the cloud. The cloud did, in fact, turn bullish over here. You can see that right there. Here it is on the daily chart. Actually, on the daily chart, today it dropped 1.63%, closing under the 9 period. So I'm going to remove that from it's going to lose its blue status. What about gold? Now, gold today, check this out. It's moved up even more, but today was down 0.23%. It's getting a little bit extended, all right, from the moving averages. It's more likely to pull back a little bit. That's just my intuition, because if you look at the volume over here, it's not just the fact that the price gapped up and then started dropping and then the sellers were in control. As you can see on a 5-minute chart, that's the 5-minute throughout the day. Okay, so it gapped up and then just declined. It even got into the 200-day moving average on the 5-minute chart. So that tells me there's a good chance it might drop. Now, the thing is, it's not that far away from the moving averages that will most likely find support. It's only around 3% away. Okay. Gold's had a nice run. Weekly chart also broke through this consolidation stage here, but it's just not showing so much strength yet, right? We're still early in the week. We'll see what that looks like, what this candle forms by Friday. Get a better picture of what's going on. Here's silver down 0.88%, also kind of pulling down a little bit, but it's still above the cloud, above the moving averages on the daily and on the weekly. GDXJ, the Junior Gold Miners ETF, that one also is looking a little toppy up here, down 0.90%. I'd be watching the low of that candle, because if it does get underneath, it's most likely going to pull back some more. That's the weekly, and here's the daily. COPX, Global X Copper Miners ETF. All right, so that one is, here's the daily chart. I mean, it's relatively close to the tangents, and I wouldn't be as concerned about this one, that this is going to definitely fall. On the weekly chart, ooh, yeah, it's forming a doji, but remember, it's just Tuesday, folks. This candle has not formed yet. Gotta wait until Friday to know. GDX, Gold Miners ETF, also a bearish engulfing type pattern here, down 0.58%, but very close. GDX is the Gold Miners ETF. Not the Junior Gold Miners, but the regular GDX Gold Miners. And this one also down 0.58. XLC is Communication Services. Remember, I mentioned that this was probably the strongest one today, and I liked how it performed. It was up 0.57%. And then XLY, Consumer Discretionary, even though it's above Tenkan-sen Kijun-sen on the daily and on the weekly chart, it was down 0.14%, not looking ultra bullish here. All right. Actually, let's talk about ETH as well. That's Ethereum. It's stuck in between the two moving averages right now. It's up 0.10% just for the day. Tom Lee thinks we're going to hit some big numbers with crypto by the end of this year. It's going to double in price. I don't know about that. I'm kind of skeptical it's going to move up that much. You know, anything can happen in the markets. I don't know how anyone can even predict something like that, especially when it comes to crypto. But you know, overall, how's crypto been doing? I mean, if we look at the weekly chart, you can see since April of 2025, it's moved up 189%. That's Ethereum. Okay, that's from the lows of April. Okay, and then if we look at Bitcoin, which is IBIT, from these lows here from April, around April 11th, it's moved up 46.4%. So yeah, ETH is the more volatile one that has more potential for moving up more. So we'll see what happens there. Okay, and then is there anything else I want to cover? Oh yeah, we already covered GRNY. Oh yeah, we're going to cover one of our members' requests, BILL, which is Bill Holdings Inc. Now you know what I want to do also is take a look at this on FinViz for a moment. All right, so we're basically looking at a daily chart here. We can see the last 3 earnings announcements were actually positive. So this goes back to February 6th of 2025. Then we had the one from May 8th, 2025. That was also pretty bullish, mostly, right? Price didn't really react much, as you can see. In fact, from this one here, it dropped. But then now with this most recent one on August 27th, because the revenue was up 1.73%, it wasn't like a huge move up, but it was a surprise nonetheless. And it's broken through some levels. You can see that it has broken through these highs here, right? So it's starting to show some strength on the daily, okay? And ADX is moving up. Positive DI is above the negative DI. It is dropping a little bit, but it's, again, it's for the most part, it looks pretty bullish on the daily. We've got a little pennant formation right there. It could pop some more. And let's go down a little further. Let's see how it's performed. Year to date, it's down 39.89%. Okay, so that's a lot. But it's up for the month 24.99. So it's a very volatile stock, obviously. Okay. What else about this stock? The sales have been increasing. You can see that there quarter over quarter. I'm sorry, year over year. And then the EPS, earnings per share, has increased to 0.23 in 2025 versus negative 0.27 in 2024. There was a recent downgrade on August 28th by Piper Sandler from overweight to neutral with a price target of $50, which is basically where we currently are. If we scroll down further, we can look at the free cash flow. That's declined a little bit. You can see that here in the last quarter. And then what about, let's take a look at the income statement for a moment. I just want to look at the net margins. Net margins are, it looks like, improving at least from the prior quarter. All right, so it was up a little bit, just slightly up. So, and let's take a look at it, all of this on TC2000 now. All right, so BILL, we're looking at a weekly chart here. This was the daily chart like I just showed you in FinViz. So yeah, technically on the daily chart, if you're just using the daily, then yeah, it's doing okay. And I would, you might, if you already have a position in this, you can certainly manage it from this point. Maybe using the daily, maybe also utilizing a shorter time frame. It could be any of these, like 2 hour, for example. What you see here is it's been stair-stepping up. Here's the 1 hour time frame, 30-minute, right? And so the daily doesn't look terrible, but on the weekly chart, we are, okay, let's go switch it back. We're under the cloud. So I would not recommend adding a position here, obviously. Does it seem like it's bottoming out at this level? It does a little bit right here. You can see that. But you're taking a chance, and it did in fact break through. It looks like it broke through this little high right here. Okay, that happened last week. So yeah, it's got some potential here. The Tenkan-sen also crossed, if you zoom in above the Kijun-sen. It's got some potential, and most likely the next level of resistance will be the cloud, and that's about 27.89% away. All right, so if you're trading this for the short term, that's one thing, but just recognize it is going to come to resistance pretty soon. And it's even though it says beta 1.19%, this stock seems to move quite a bit. This large candle here, you can see that one right there from February 7th, 2025. It actually dropped in 1 week. It dropped about 33.8%, and then it got under the cloud. So that's what I'd be concerned about. The 200-day moving in is also declining, but there does appear to be some strength here recently. These last 3-4 weeks, now you can see it's been moving up. All right, folks, that's going to do it for this video. Now, if you guys like the software that I'm using, it's called TC2000. You can actually get a $25 coupon for this. If you come to my channel here, Blue Cloud Trading on YouTube, and you want to get that discount, what you want to do is click on 8 more links right there, scroll down, and there's the link. $25 coupon for TC2000. Click on that. Add your email here. Download it for Windows. You can run it on a Mac if you have Parallels. Okay. I'm sure if you're a Mac user, you're familiar with Parallels because it is Windows software. But you can also use the web-based version of this. So there's a web-based version for the platform as well. Here's the pricing information under software plans and data. All right. You can do monthly or biannual. get a little bit more of a discount biannually. I would recommend the premium versus the basic or premium plus if you're starting off, if you want to be able to draw on your charts. That's important, like the chart drawing tools. Okay, drag, you can see that right there. If you want to be able to set up alerts, you can only do that under premium. You can see all the different options there. And then finally, one more thing I want to mention is if you guys are interested in becoming a member, you click on this link at the top. You'll find it either here or here. Once you click on that, it will pop up this little pop-up here, and you can see Blue Cloud Supporter, Blue Cloud Trader, and Blue Cloud Legend Level Member. You can request a stock to be analyzed as a Blue Cloud Supporter. You can request up to 2 stocks be analyzed as a Blue Cloud Trader, and up to 3 as a Blue Cloud Legend Level Member. Under the Blue Cloud Trader, you also get exclusive member-only videos. Same thing under Blue Cloud Legend. Okay. And then under Blue Cloud Legend, there's one more really important thing is you'll get access to the daily trade updates that I post, and they post right next to this. It will pop up after you've become a member. Right after you've become a member, it will show up. You'll see this pop up here, this tab. That's where you'll find the daily posts. All right, guys, that's gonna do it. Like I said, for this video, thanks for watching. Thanks for supporting the channel. Don't forget to like, subscribe, share this video if you think someone might be interested in. Most of the people who have who like this channel, they tend to share it, and you know, that helps to get the word out. We're over 22,400 subscribers now. I just learned that I'm technically considered a micro influencer. So I'd like to become a macro or a mega influencer at some point, right? 22,000 subscribers just makes me a micro influencer. Anyway, thanks for watching. Appreciate you all. These are the videos down here, the members only videos. I did one just 2 days ago where I go over my entire portfolio. That's the kind of stuff that you'll have access to. All right, have a good rest of the evening.